Next, we have the sales and the cash receipts and cash disbursements budget. So we want to figure out our total sales. I'm just going to pull those down from what we had up here. And now we're messing with dollars. So I just copied that from up there. And it has to give you some information to help you solve that. So it tells you, in real life, we would ask our collections people. But in this case, it tells us 10% of the sales are cash, 30% are credit. Oh, I guess that means 90% are credit. Can't finish reading. So if 10% are cash, the other 90% are credit. So I need to take the 90% times my 225. And my life's going to be a lot easier if I put those dollar signs around there. And then my cash sales are 10% times the 225. So again, double check, make sure those total up, otherwise you've messed up. Then once you have that, again, you could pull that over, make sure it isn't, it's computing correctly. And that would be your total cash and credit sales. So next you want to do cash receipts. And clearly your cash sales are collected in month of the sale because they're cash. So we can just copy those. And then again, you just have to read. Every problem's going to be different on how these percentages lay out. So 30% of the credit sales are collected in the month of the sale. So, you know, the people who buy it in the beginning of January will pay before the end of January. But 70% are going to show up in the next month. So they get their bills in, they buy it in January, but pay for it in February. So collected in the month of the sale, 30%. That means the other 70% are the next month. And notice again, those are of the credit sales. The cash sales, you're going to get cash that time. So I need to take 30% times my credit sales up here. And here I'm going to take 70% and of the prior month's sales. Well, I don't have prior month sales. So that doesn't make any sense. So where am I going to get the 70% that's collected in January from my December sales? So I got December sales that got collected in January. Got to go back here and see if it gave me other information. And if you think about it, what in the world is an account receivable? An account receivable is somebody who bought something this month, but they haven't paid for it yet. So we're going to assume everybody pays us, so that 154 is our accounts receivable December 31st. Those people are going to pay up in January. So 154 goes there. Okay. In February, though, we do have to do our calculation. So we're going to take our 70%, and that's going to be of January sales. So the 202 goes here. One way to look at it, 30% of these people paid this month. The other will pay next month. There's your 202. So some of them paid this month, some of them will pay next month. So this number here, I'm going to go ahead and do the calculation. So collected this month, I'm going to have 30% of my February sales will be collected here. And then the 70% times those 270 will show up in that next period. So that 70%, if you think about it, that's going to be your accounts receivable at the end of February. 1, 2, I think that we had, maybe that was our problems as a leap year. That's what made life weird this year. Okay. So that's going to be my accounts receivable. So this 81 plus the 189 is 270. All right. Questions on that? So then I can just total these down. Again, I hit Alt equal to know how to find it, but I hit Alt equal to do that. There's different ways to do it. And then I can just carry this across. And that's your cash receipts budget.